Hello, I'm Crystal Petrie, and you are watching another episode of the Crystal Petrie Podcast. On today's episode, we are going to learn all about commercial real estate and commercial loans. How can you get a loan if you are looking to start a commercial business? And here to educate me, especially, and you, we have Berlitz Georges. So, welcome to the podcast, Berlitz.
Hey, Crystal, thank you so much for having me. I'm finally on this show. I think it was like when me and you connected maybe 3 months ago or so. And then
At
I'm finally
least.
here with you. Yeah, at least 3 months. Yeah, so long overdue. Thank you for having
Yes,
me.
we both have made it happen.
Absolutely.
Okay, so Mr. Georges, where are you located? Where in the world are you?
Yeah, so I'm here in the desert. Chandler, Arizona, which is part of the greater Phoenix area here in Arizona. I'm originally from Miami, Florida, however, and I actually did used to live in Texas for a little bit.
We
Austin,
miss
Texas.
you.
Yeah, Texas was great. Texas was great, but I decided to move more further west. So I've been living here in Chandler, Arizona for the past 4 years, and this is my domicile. This is where my business is located, although I can do business nationally.
Okay, and we will definitely get into that because I think that's amazing that you're able to do business outside of the state of Arizona, but we will get into that. So, my first question for you, you are a commercial real estate mortgage broker, which is
Right.
a mouthful. Explain to us what it is you do,
Sure.
what is that?
No, absolutely. So it is a mouthful. You're right. So as a commercial, and the reason I always like to specify commercial real estate, because you do have commercial mortgage brokers, but as a commercial real estate mortgage broker, I specialize in securing financing for all real estate types from retail, office, multifamily, hotels, land, industrial, you name it. And as that commercial real estate mortgage broker, we do have access to multiple lenders. That's both traditional lenders and alternative lenders to be able to help our clients out. And my client base, it consists of business owners who own commercial real estate. So whether they're looking to do a refinance of their commercial real estate or they're looking to expand to a second location and acquire another building, I can help secure financing for that. Investors who invest in commercial real estate. So you do have investment type properties, right? Which is called in my world income producing properties. So that could range from a triple net single tenant Starbucks or a Walgreens or a Walmart. So those type of investment type properties, multifamily hotels. Well, there you go. They go to videos there. And then also developers who develop commercial property. So if they find a piece of land and they get approved with the city or the county, and they're looking to build something, rather it be a multifamily property where it could be 50 units or 60 units or 100 units, I'm able to help those clients out, and I help them by getting them the best terms and rate that is out there in the market. Yeah.
Okay, you said a lot of words
Yay.
that I'm going to follow up on and ask
Yeah, I like
you
it.
to just expound on for me.
Sure.
So, the
Sure.
first one you said that you deal with traditional
Right.
lenders and non-traditional. So,
Right.
explain that, please.
Yeah, so when we talk about traditional lenders, we're talking about the big banks, right? So we're talking about banks such as like the big four, because I used to work for two of the big four banks. That being Chase Bank. I did work for Chase Bank for about 12 years. And then Bank of America, I worked for them for about 4.5 years. And then a couple of other banks thereafter. So from the traditional sense, there's credit box that must be met, a certain credit score that you must have, a certain property type that these banks would typically like to be able to finance. And then some, typically when you're talking about a traditional financing with these banks, these credit unions, these community banks, there's certain max terms that they will offer. When I'm talking about terms, meaning if you get let's just say you're looking to apply for a commercial real estate loan, some banks, the max term that they will offer is 20 years. So you'll have that mortgage for that 20 years. Sometimes it can be fixed for that 20 years, or it can be amortized over that 20 years. Now, alternative lenders are those deals that are typically not bankable. So let's just say if someone's having an issue with credit, in a traditional bank may take a look at it and say, hey, we like the deal, but your credit did not meet our credit box. Well, there's lenders out there that will take those who have less than favorable credit and take on the project if everything else makes sense. So alternative lenders would be bridge lenders, hard money lenders, life code companies, CMBSs. So you have those different types, and oftentimes they'll take on more riskier deals, and they will offer longer terms compared to a traditional bank. So that's more that goes into it, but I just want to give you like a high level overview, and that probably was a mouthful as well too. I can do a lot of talking, you know. Yeah, I
It's
can do a lot of
okay. Listen, we have an hour. We have an hour to figure out all these words. So we good. We good. Okay. So another thing that you spoke about was investment income property, I
Yeah,
believe was the term.
income producing properties.
Okay,
Yes.
income
Yeah.
producing property. So explain to us what that
Yeah.
is.
In simple terms, to make it easy for everyone listening, if they first time hearing it. So you have a landlord and you have a tenant. So with that, the landlord is always collecting rent from that tenant. So that makes that an income producing property, as opposed to a business that owns a commercial property, but they're operating out of that property as a owner user, where they're selling products, they're selling goods to the general public or consumers or wherever the case may be. So income producing property is there's a landlord and there's tenant. Sometimes there's a single tenant. Other times there's multiple tenants that's there and they're collecting it. So with that, me being a commercial real estate mortgage broker, in for short, commercial mortgage broker, whenever I'm meeting with a client, we do collect a current rent roll showing who is the tenant that they're leasing to, how long do they currently have in that lease, what is that rent that they're collecting on a monthly basis, and just based on that, if there's enough income. So once you collect the rents, obviously there's expenses that comes with that, and then after that there's the operating income, the net operating income, and that's what is used to size the loan. But to answer that question, landlord tenant collects rent each and every month, so income producing in that sense.
When you explained that, I immediately thought of like people who rent out homes.
So
So
you
is that what we're talking about? Like, I get a home, I flip it, and then I rent it out to someone.
So in when it comes to loans, so you do have residential and then you do have commercial. So yes, residential, you rent out the home, you collect rent in that space, right? But in my space in commercial, you can have a similar concept of thinking that way, but residential and commercial are two different, things. And even when you take a look at it and underwrite it, is even underwritten differently as well too. So in commercial, there are landlords, and the landlord is the owner of the property. It's the owner of the property that is receiving those rents as passive income. So when you look at apartment complexes, there may be an apartment complex that has 30 units or 50 units or wherever the case may be. So the landlord, or we'll just call it the owner, is collecting that rent. So to answer your question, there's residential and there's commercial, but I was more so talking about the commercial space.
Commercial side. Okay.
Yeah. So I specialize in the commercial space only.
I get it. So you were talking about, when you were talking about traditional lenders, that there's a certain credit score that you have to have. Now,
Right.
I know it's different for different people and different companies,
Right.
but what would be the ideal credit score for someone who was wanting to get a commercial real estate loan?
Sure. So most banks that you go to from a traditional sense, 680 or better is what they're looking for. So 680 or better. Now, with that being said, let's just say if you dip below that 680, depending on the lender, they always want to hear the story. One thing about lenders is this: they love the history of the property that you're looking to finance, and they love the history of the individual who's going to be looking to purchase this property. So there's always a story behind the numbers, and some lenders are willing to hear the story, while others is like, well, you got a 650. I don't care for the story. So it is like that, right? So just depending on the lender, and that's why I love what I do so much, is because I have a fleet of lenders that I can go to, and I would know, okay, this lender would likely like to hear a little bit more about, okay, what caused your credit score to be 650 or 660, and if they feel comfortable enough with it and everything else checks the box, then they can likely probably move forward with it. Other lenders, it'll just likely just be a hard no. And 656, I don't. Yeah, you can give me the story, but our decision is still our decision at the end of the day.
Speaking of story, let's hear your story. How long have you been in the commercial real estate business, and why did you choose that as your career?
And that's a great question. So I
Thank
actually
you.
started off. Yeah, that's an awesome question. Question rather. So I started off as a high school intern when I was in Miami, Florida, with a bank called Washington Mutual Bank slash WAMU. And then the Great Recession came about during the 08, 09, 010 era. And Chase Bank came and acquired WAMU. So it was no longer called WAMU Washington Mutual Bank. It became Chase Bank. So I was with Chase Bank for 12 years. So I started in banking. So my professional career started in banking. And working at the bank, I worked as a bank teller, then I worked as a personal banker, then I worked as a small business specialist, and I worked as a business banker, and then a relationship manager for 12 years. And then in 2013, I made a lateral move with the bank to Austin, Texas. And I spent about a year and a half with that bank. And then after a year and a half, I joined another bank, another Big Four bank, Bank of America. Worked there for about 4.5 years. Did great there as well too, and then left that, and I went to work for another regional bank, BBVA, which is no longer BBVA, is like PNC Bank here in the U.S. Did that for about 2.5 years, and I did another lateral move from Austin, Texas to Arizona with that bank, and spent a year or so with that bank. Then after that, went to a small community bank here in Arizona. Did about a year there, but it was in my time with that small community bank that I was getting referrals or my deal source from a commercial real estate mortgage broker, or for short, we'll just call it commercial mortgage broker. And I'll never forget, he was like, Berlitz, you're pretty good at what you do as far as like underwriting and looking at deals and assessing it and talking to your community to get the deals done. Have you ever considered being a commercial mortgage broker? And I'm like, well, why you say that? He said, well, as a commercial mortgage broker, you now have the ability to say yes as opposed to no. And I'm like, what do you mean? And I already knew where he was going with it. So working for a direct lender, if for whatever reason, if your loan request does not fit that credit box, or if they don't have a credit appetite to do your deal, unfortunately, they're going to have to pass up on the deal. So that's where the no comes into place as a direct lender. But as a mortgage broker, we have access to multiple lenders. So if this lender say no, if lender A says no, I can go to lender B. If lender B says maybe, I can still go to lender C to see, okay, just in case that maybe turns into a no, I can go to lender C and lender C can tell me yes. So I'm in a position that if Crystal is looking to purchase a Starbucks, or you're looking to purchase a Jack in the Box, or whatever it may, a Cold Stone Creamery franchise, whatever, hotel, you'll come to me and I can tell you based on the financials of the property, based on your financials and your net worth and your liquidity, this looked like a pretty good deal that I can go ahead and get done. So I can tell you, yes, I can get the deal done. Now, it may mean that I may have to go to maybe 3, 5, 7, 10 different lenders, but I can assure you I'll go ahead and get that for you. I'll give you a quick story, then I'll shut up about it, right? So this is how I started. And you know what? I'll save that part. But that's how I got
no, go ahead. Now I'm invested. I'm invested now.
All right. So I was going, so there was this client that was looking to purchase a hotel. It was an out-of-state deal. She lived in she lived in another state, we'll call it, Maryland, and then this property was in New Mexico. And I literally went to 11 lenders, 9 of which told me no. 9 of which told me no. 2 of them told me yes. So out of that 2, she had to choose out of the 2 that she wanted to go with as far as the rate and the term. So imagine if I was one of those direct lenders out of that 9 that said no. Then it's like, unfortunately, I can't help. But as a mortgage broker, I literally had to go to 11. 9 said no, 2 said yes. So that's what led me to become a mortgage broker. I'm in a position to say yes. Now, there's going to be cases where you may have a deal and that deal is just not a bankable deal and no other alternative lender will look at it. And it's something with that, I'll just have to advise my client at that point why this deal would not work. And this is what you got to work on and come back to me maybe in a few months or a year or 2 to get you the financing that's needed. So I'll stop.
Why did you go to 11 lenders? Like, why after like 5 you didn't stop, or 6 you didn't stop?
That's a great question. So in the mix of that 11, I want to say probably by the 4th lender, I had got the yes. But with me as a mortgage broker, I just don't want to present to you just one term sheet. And when I mean term sheet, meaning one pre-qualifier from a bank, my goal is to always present anywhere from 2 to 3. If I just get one, I said, oh, I need at least a second or third one so that my client has an option. So that was one. And the other reason, which is the main reason, is I underwrite the deals, right? So I take a look at the property, I underwrite the property, I take a look at the individual, I underwrite the individual. And based on that, I felt really good that I said, you know what, this deal can get done. And I just have to have the lenders who will take a look at it just to, see what I see. So I would never take on a deal that I don't think is a doable deal. And that deal was definitely a doable deal that I felt confident about. So that's why I continue to win and pursue. So the first yes came in maybe after the fourth, me looking at a lender, but I still needed a second or a third one. And that's why I kind of did what I did there. So hopefully that made sense.
Absolutely.
Yeah.
How do you have, and maybe this is because you are a broker, how do you have access to so many different lenders?
So I like to make friends everywhere I go, and also,
Okay.
so I lived in Florida, I lived in Texas, I live now in Arizona, and I do travel sometimes to different cities, and sometimes it could just be a simple LinkedIn messaging based on the loan programs that this lender is offering, and I say, hey, I'd like to go ahead and connect with you, or I may see something online that has a great offer, and just go ahead and reach out to them. And my network has their network as well too. So I can always reach out to my network. Hey, do you know a lender such? And, that sort of thing. But I think it really just comes with the 20 years of experience and the relationships that I've made over the 20 years, and the relationships that I have. These people also have those relationships out there as well that I can go ahead and leverage. So yeah, it's a beautiful thing. Like the other day, Hawaii, I got a couple of contacts there in Hawaii, so yeah. All right. So you just make connections with people.
Right, right. And I feel like, I mean, this is a definite yes, but I feel like the more connections and relationships you have, the more lenders you have available to you, the better for your clients.
No, absolutely. Absolutely. Totally agree with that. Because there's going to be different requests, different asks, and with that, it's very important that I have a suite of lenders made available, and more importantly, I love giving my clients options, because oftentimes you may go to a lender or a mortgage broker, they'll give you the option that they want to give you, but I want to be able to give options and explain why I think this may be more favorable to that person, but then again, I just allow them to choose.
Okay. So, Berlitz, are you taking on new clients at this point in time?
Yeah, anyone who's out there who's looking to finance commercial property, if you're looking at, and it can be as small as a 5-unit apartment complex to a 100-unit apartment complex. It could be you looking to purchase a hotel, and you bring in the partner that may have the experience. It could be you want to purchase an industrial building or a warehouse, or you can just be a business owner who's looking to expand. So yes, as it relates to commercial real estate, and you're looking to purchase commercial real estate, I'm your guy. Yeah, so I am open to new clients.
If someone wants to get in contact with you, ask you questions, become a client of yours, how do they do that?
The best way is they can actually visit my website. I do have my email address,
Mhm.
bgeorges at wesleycbfirm.com. That'll be the best way of getting a hold of me, because I'm constantly in front of my, rather be on my computer or my phone. I'm constantly there. And if people want more information on the business itself and how we can tailor our services to your unique need, they can reach me at www.wesleycbfirm.com. So that's the company website. But the best way would be the email.
Okay, so in your story, you said that the woman was in Maryland,
Sure.
you're in Arizona.
Arizona. Yeah.
How are you able to operate outside of the state of Arizona? Because I know you have to do like a real estate test, right? To be licensed in the state where you're going to work, correct?
Right. So as a mortgage broker, I want to say, and don't quote me on this, I believe it's 13 states, probably could be a little bit more, that does require that you have a license in order for you to be able to be a mortgage broker and do business in their state. Arizona happens to be one of them, so I do have my license with the state of Arizona. Um, Now, as it relates to the New Mexico deal, yeah, I can still do deals there because I'm also affiliated with, and I didn't get a chance to say this, affiliated with another brokerage firm called the Apartment Loan Store out in Portland, Oregon, and they have license in 50 states, all 50 states. So I can always just leverage that as well too. But I'm able to go. I'm able to just go anywhere and get the deal done. Now, where it really kicks in, you do have lenders at times, and I tell my clients this too. If we're working on a deal, there's times that the lender will go ahead and pay the broker's fee, because my services do come with a fee, but that fee is only collected at the close of escrow. And there's times that the bank will actually pick up that tab. And in order for the bank to pay that broker's fee, you would have to be licensed to be able to get it. And if you're not licensed, the bank won't even go ahead and they won't even pay the broker's fee. Like, oh, we're not even doing it.
Okay.
You get it from the client, right?
So
Right.
you are licensed in Arizona to work in
Correct.
Arizona, but you can work in any other state outside of Arizona. So if my clients are in Texas
Oh
or
yeah.
wherever, they can contact you, they can email you or go to the website
Sure.
and you can still help.
No, absolutely. Definitely be able to help.
Wow.
Absolutely. Absolutely. I can, yeah. Texas deals, I can Texas, New Mexico, Florida, Hawaii, you name it. I'm there for it. Virginia, I'm there for it. Yeah.
How do you broker deals or put together deals for properties like hotels or hospitality centers, things like that?
Right. So I just follow. There's like 7 pre-qualifiers, right, that lenders look at, and it just pretty much goes in rotation. So whenever I'm looking at the deal, I just always just look at these qualifiers whenever I'm underwriting it. And the first is they take a look at the quality of the borrower. So let's say if you're the one looking to purchase or secure financing for a hotel or apartment complex or a shopping center or strip mall or whatever the case may be, they're looking to see, okay, does Crystal have the experience of owning a shopping center? I think out in Dallas, no, you're in Houston, so I think you guys like have a Kroger. It's Kroger, right?
Well,
Or
I'm in Southeast Texas, but yeah, we have
HEB.
a
You
we
got no,
have
is it
Kroger
HEB?
and HEB.
Okay, like
We have
HEB. All
both.
right. So you can be in a position to own or be like the landlord owner for a HEB or a Kroger. Like you can literally own it. And oftentimes this is in that strip mall. You have the shopping center, then you may have like a nail salon, a hair spot, or other like retail spaces that's there. So let's just say if you was looking to purchase something like that, um, I would take a look to say, okay, do you have experience of owning a strip mall like that? Take a look at, your credit. What does your credit score looks like? Take a look at your net worth. So let's just say if a strip center you're looking to purchase, I'm just gonna make this number up. Let's just say it's $5 million.
Okay.
The lender will be looking to see, is your net worth equal to $5 million as a rule of thumb. Now let's just say if Crystal wants to go in a partnership with her sister, her brother, a few other people, and the total partners that will be involved in this deal is 3. So collectively, they'll be looking at, okay, collectively, is their net worth $5 million? And then when I say $5 million, the loan will be $5 million, not the purchase price, but the loan itself will be $5 million.
Okay.
So your total net worth will have to equal that $5 million. And then they'll be looking at liquidity. So liquidity
So
is,
that's the second, right?
that's actually, so that's actually still within the first. So there's like subcategories within that. So that's still within the first. So then they'll be looking at liquidity within that quality of the borrower. So with liquidity, they're looking to see, do you have enough to put down, and do you have enough for closing costs? So if you have that, also, all right, great, you have that. Then they're going to be looking at post-closing liquidity, because after you put the money down for the down payment and for the closing costs, the bank don't want you to go broke. So they want to make sure that you have a reserve. So they'll look at 10% of what that loan amount is. So if that loan amount is that $5 million, then you need at least what would that be? 10% of that, my math is going crazy, like $500,000 or whatever that you need as a reserve in the bank. Or if it's a $1 million loan, you need 100,000 as reserve. That's just a rule of thumb. So anywhere from 10 to 20%. The second thing is location does matter a lot. So they're looking at the demographics, they're looking at average household income, they're looking at the traffic count, how busy it is in that area. They're looking at crime rate. They're looking to see, is it in a big market? So location is important. The third thing is the property income. So as we talked about, you being the owner, landlord, you collect rent. Obviously there's going to be expenses that come out of that. But after your expenses, is there enough profit that's there, like net operating income, which that would be? And with that net operating income, that would actually be the number that they use to see, all right, how much of a loan we can even qualify you for based on income minus expenses is your net operating income. And based on that, how much can we actually lend you?
Okay, let me interrupt you just for a moment here.
Sure.
What would be, you spoke that you would have to have a down payment and closing costs.
Yeah.
What percentage would that be? Like, what percentage would you have to pay for the down payment? What percentage would you have to pay for the closing costs?
Right. So the down payment, it really just depends on the property type. So this retail property that we're talking about, the max loan to value that lenders will offer on something like that will be 75%. But because interest rates have been so high and we're still kind of battling inflation, that LTV will likely be anywhere from 65 to 70% max LTV, which would mean the borrower will have to come down with at least 25 to 30%. And as far as the closing costs, I always forget the percentage of that. I want to say, what's the percentage we always, the rule of thumb on there, like anywhere from like 3 to 5%, I believe, of like the loan amount. But don't quote me on that though. But there are closing costs that goes into it. And closing costs does include, your appraisal costs, your environmental, title, escrow fee, the bank fees. So all of that is within the closing costs.
Okay.
Yeah.
Okay.
Yeah.
Now and I'm gonna let you get back to the 7 qualifiers. Is the 25-30%, is that a lot? Because in my ear, it sounds like that's a lot for a down payment.
It depends on the purchase price. So if we're talking about a $1 million loan, that's 250,000 that you have to come down. If it's 25%, that's 250,000 of that $1 million. If we're talking 30, then that's 300,000. So it just really depends on the size of the loan, where it could be that, and also the property type as well too. Now let's just say for your business, and you say, hey, Berlitz, I'm looking to get this studio where I'm gonna, I'm owning this, and it's gonna be 100% occupied by me. well, then that would be looked at differently. Is now is no longer an investment income producing property. It's owner occupied real estate. So in that case, I can get you a max LTV if we're looking conventional of 80%, where you just have to put 20% down, or
Okay.
we can just go to SBA 7A, and you can put as little as 10% down, anywhere
And
from
that's Small
10.
Business Association, correct?
But that's Small Business Administration. Yeah, the Small
Okay.
Business Administration, the SBA.
Administration. Yeah.
Right. So you can, so with that, so now that $1 million purchase price, your down payment, if we're talking about SBA 7A, now you're looking at, instead of putting 25%, which is 250, now you only got to come down with 100,000. So so it really depends on the property type and how the property would be used. So there is a difference between owner occupied and investment real estate, and with that, you have different terms. And when I
Okay.
say terms, meaning the LTV is different. Loan to
Okay.
value. When I say LTV, meaning loan to value.
Okay, so thank you for answering that. Now you can get back to your seven qualifiers. I know you ended on liquidity, and I want to make sure we get that out in case my audience and the listeners are like taking notes and writing this stuff down.
Yeah,
So I want to
absolutely.
make sure you finish that thought.
No, definitely. So we was at, so location, NOI, so the property income.
Mhm.
So the fourth one is occupancy. So when we talk about the HEB example of like the grocery store, strip mall, when we talk about an office building, or when we talk about a multi-tenant warehouse, so like industrial warehouse, uh, 80% is what lenders are looking for as far as it being occupied. Anything less than that is considered to be a distressed property. When we talk about multi-family, like apartment complexes, lenders like to see 85%. So if you have 100 units, at least 85 of those rooms have to be filled in order for the lender to feel comfortable about doing the deal. So occupancy is important. The fifth thing is the quality of the tenant. So when we talk about HEB or Kroger and some of these other things, HEB is considered to be a credit tenant. So the HEB is big, so they like that. So the quality of the tenant. The sixth thing is the quality of the lease. So how long would you have HEB as a tenant in there? So typically it'll be anywhere from 20 to 25 years. So lenders love that, right? So anything 5 years or more on the lease from them renting from you, lenders love that. Anything less than 2 years on the lease, it gives lenders heartburn. And then it gives them heartburn, so it's like, oh, wait a minute here. And the seventh thing is the property condition. So because the lender is going to take the property as collateral, they just got to make sure that there's no issue with the roof. The foundation is great. In the event, they got to evict you or whatever the case may be, they have a good property that they can go ahead and get, they can resell in the market.
So far, Berlitz, we have been talking about commercial real estate property that already exists.
Sure.
What if I wanted to take out a loan for a commercial property that I wanted to build from the foundation up?
Yeah, so there's even more that even goes in to that. So yeah, you can absolutely do so, especially if you're looking at existing buildings and you feel like, well, this may be overpriced. It'll probably be cheaper for me to build it as opposed to purchasing an existing building. So if you come to that, like, okay, it's cheaper to build it than to purchase it, then great. That can be a thought. And it's really, what is the intended use? Is it going to be owner user? So let's say if you're looking to build your studio, okay, well, it's going to be owner user. So that's a good enough reason, right? But let's just say, well, it's going to be for an investment purpose. I want to build a hotel.
Okay.
I want to build an apartment complex. Then at that point, you have to be able to go through the city to make sure that the city approves your plan for the thought or idea that you have with this plot of land that you identified in your neighborhood, or this plot of land that you identified downtown, wherever it may be. There's an entire process that you must go through with the city, because they have to approve your drawings, your plans, the architect drawings, or what have you. And if they approve it, and that process can take anywhere from 6 months to a year. Well, really closer to a year.
Okay.
And then once that get approved by the city, then at that point, that's where I will come in to help secure financing for the development of that project. So it's not as easy as, hey, I found a land, I'm ready to build on it. No, the city has to approve what you're looking to build on it. And if they don't, you just got a piece of land that you can't even do what you wanted to do with it.
Do I have to get the city's approval first before
100%.
I come to you, or do I come to you and then get the city's approval?
So there's nothing that I can do from securing financing if the city hasn't approved it. Now,
Okay.
with that being said, yes, you still can come to me and I'll walk you through the process of what needs to be done. I'll collect what I need to collect from you in preparation of when we go to the lender. Hey, we have everything that you now need. So I'll help during that process of gathering all the required docs
Okay.
so that once we have everything, then at that point, there's no time wasted. The executive loan summary will kind of be already drafted, and I can go to the lender. Now, if you were to go to a direct lender, they'll look at you like, well, you literally got another 6 to 8 months before you even get entitlements. There's absolutely nothing I can do for you. So they won't even bother, because that's a lot of manpower, a lot of time that's invested into something that's not there yet. But me, on the other hand, I'll definitely walk you all through the journey of that. So yes, you still can come to me, but just know you won't get any financing until you get that approval from the city, and that can
You
take up
seem
to,
like such a hands-on,
yeah.
like dedicated
Right.
broker.
Oh yeah, yeah,
Wow.
yeah. I have to. So I like to be lockstep throughout the entire loan process. So my business, Wesley Capital Brokers firm, we believe in providing white glove service treatment to our clients. So from the initial consultation, when we first sit down and we talk, rather be over the phone, rather be through Zoom or in person, from that all the way to the close of escrow where you signing, I'm with you throughout the entire process. So even once I connect the two with the lender, I'm still involved in the communication process. So I kind of like to look at it as a quarterbacking everything. And at the end of the day, I am an advocate for my clients to the bank. Because oftentimes I had one client who told me, well, Berlitz, can I be honest with you? I said, as it relates to your deals, I said, I will hope so. You tell me everything that I need to know, and then I can go ahead and create the narrative for you when presenting it to the lender. Because remember, I have 20 years of banking experience. I know what lenders think. I know what lenders look for. So my clients are already at an advantage because I can speak the language of that lender. So you come to me, I'm speaking the language of the lender. So it's like, now you can be open to me. You can say, hey, I don't know this, I don't know that. Well, don't worry, because what I'm about to do now is going to make it seem like you know all of it based on, the narrative that I create. Right. So that's what I do for my clients. So to answer your question, 1,000% hands-on. Yeah,
What
1,000%.
did the client want to tell you? Can you tell us when he was like, can I be honest with you?
It's just like, all right, it was as simple as, I had a couple of losses last year
Okay.
on my business tax return, and I'm like, no, of course, yeah, just tell me what it is. And what's so crazy about it, it was not even that bad. It was not bad. So like literally what he shared with me, I can still include it. It wasn't bad at all. It's one of those things that's clearly understandable. So sometimes you have clients that's a little hesitant on certain things, but
Mhm.
again, I'm there with them lockstep. I'm
How
like there too.
old do
Yeah.
clients have to be to, I guess, start this process?
You
Like
said
get a
how old or how
loan
old?
and purchase commercial property?
Wait, what was the question again? I'm sorry.
How
I'm sorry.
old? How old does someone have to be to start this process? Like if they wanted to
Mhm.
purchase, a commercial real estate property or build something, is there an age that you have to be before you can even dip your toe in this?
You just got to be the legal age, a legal adult to be able to do it.
So
So
18? Is it 18?
listen, if you can be 18, but here's the thing, they are going to be looking at experience. So an 18-year-old will likely not have experience at all with
Mhm.
owning property or even knowing what they're doing, because they're 18. Now, with that being said, if they could bring in a partner who has 20, 30 something years of experience, and they'll join together with them on the loan, then at that point, yeah, we're going to just leverage the experience of the partner who has 20, 30 years, and we'll just look at it as a mentorship of teaching this 18-year-old the ropes while this 18-year-old is gaining that experience and that knowledge through the mentorship of their partner. So, but that 18-year-old would have to bring something into the game, right? So let's just say if they're bringing in some money, they may be a trust fund baby or whatever the case may be. They have some money, but then they're bringing in someone who's experienced, and at that point, yeah. So, but there's always ways to mitigate it, though. But the first thing the lender's going to look at is like, this guy or gal has no experience, but he is bringing a partner that has 25 years of experience. Like, okay, well, we'll take a look at it. Yeah.
Okay. What are, and I know there's no such thing as a typical client, sure, but what are some of the typical clients that you work with?
Yeah, so it's really business owners who own real estate. You own real estate and you're in the business. You want to refinance. You want to do a cash out refinance. You want to expand. You want to develop another property. You're the type of client that I want. And then I'll go into like dollar signs as well too. The investors, the developers, and also I'll say commercial real estate agents, those who represent buyers and sellers. Because clearly, if you're looking for a property, you may not exactly know where to start or where to go. So what do? You go and get yourself a commercial real estate agent and say, hey, I'm looking for a property. I want it to be this size. I want it to be in this price range. I want it to be in this area, in this neighborhood.
Yes.
Can you help me identify that property?
So you do that also?
I do not. But What I'm saying is, I don't. But what I'm saying is I do partner up with those agents who will see a client like you who's looking for the property, because now as they're looking for that property, that agent will likely be like, okay, do you have a bank? And they may be like, well, I do this deal for me. Well, that agent can easily say, well, don't worry about it. I got a guy by the name of Berlitz, Georgia, and he's with, Wesley Capital Brokers Firm. He can help you secure financing because he has access to not just multiple lenders, but he has access to multiple loan programs that will be able to suit or tailor to you. So with that, I'm going to go ahead and introduce you to him. And that has happened to where I've been able to help clients out in that way. So my clients do consist also of commercial agents that I like to get referrals from, and vice versa as well.
Okay. How do you match a client's needs and what they're wanting with the right lender?
No, that's a great question. So once they come to me and they tell me, hey, depending on it always depends on the property type too, right? And what they're looking to do. So if it's an investment, my mind's already going one way. If it's owner occupied, my mind's already going the other way. And then it is, what is your goal? So what's the purpose of this purchase? Is it for a long-term hold where you're looking to, have this for the next 20, 25, 30 years? Or is it something that you just want short-term, maybe for the next 3 to 5 years? And me getting a gauge in that, let's just say if it is for a short-term purpose, I want to make sure that I put you into a loan program that doesn't have a steep prepayment penalty. Because the likelihood of you wanting to sell it or refinance it in the next couple of years, if I were to get a long-term loan that has a steep prepayment penalty, then I'm not doing justice by you. Now, if you say it is for a long-term hold and maybe term hold rather, and is not the prepayment penalty really won't matter, then great. And then one of the things I like to always ask my clients too is, if you can structure the deal, what would that look like? So now that gives me a gauge as to what type of terms that they're looking for. And then I just marry the two together and then match it accordingly.
So you are telling me, Berlitz, that if I paid off my loan early,
right,
I would get a penalty for that?
If there's a
prepayment, it seems like penalty, they would want you to pay off the loan, right?
Yes, but remember the bank got to make some money too, right? And by you paying off the loan, if you had an agreement to have the loan for 5 years and you pay it off within a year, they're not getting all that extra interest that would have come for those next 4 years. So that's why they'll attach on a prepayment penalty. Now, there's lenders out there that won't have that prepayment penalty, but that's the reason why it's so important. I have to be able to know what is your goal. So if you're telling me, hey, Berlitz, I do want to hold this property for the next X amount of years, but my goal is to pay it off in a year, then now I have to make sure the lender that I go to, they don't have a steep prepayment penalty because of your intentions of wanting to pay it off in a year. There's lenders that will remove that prepayment penalty, and there's lenders like, no, I'm not removing it.
Yeah.
So it's important for me to know what your investment goals are, and then from there, I'm able to tailor a structure that fits specifically to what you're looking to do ultimately as a property owner.
What are, and I know you can be specific, but just be as specific as you can. What
Sure.
are some things that someone needs to have before they even come to you?
Well,
Like,
that's a good one.
the credit score, what paperwork, what do I need to already have to be a valuable client before I even pick up my phone or visit the website or send you an email?
You just got to know what you're looking for.
Okay.
You can't be the one to pick up the phone or shoot out an email like, hey, I want a property, but I don't know what I'm looking for. That's wasting everybody's time at that point, right? So what is it that you're looking to do? Yes, you're looking for a commercial property, but there's different types of commercial property. There's different asset types. There's retail, there's office, there's multifamily, there's industrial, there's hospitality, special use. What are you looking for? You just can't be like, I want a commercial property. It doesn't work like that. So you have to have an idea of what you're looking to do and what you're looking to purchase. And you have to make sure too that you got to have your personal tax returns filed. Because it does require that I collect, depending on the type of deal that we're doing, especially if it's going to be a personal guarantee loan. It does require 3 years of personal tax returns. So making sure that you having your filing done correctly. Making sure that you have purchased a property. You have to make sure that you have enough money down for it. So if you come to me and say, hey, I'm looking at this property, it's for $2 million or it's for $3 million, and you want to be able to get a loan off that property that's $2 or $3 million, my question to you would be, how much are you looking to put down? And oftentimes I get asked, as little as possible. That's not a real, answer. I just, I mean, like,
Hey, that's what
instead of,
everybody thinking, as little
yeah,
as
it's
possible.
as little as possible, but it doesn't,
Yes.
I get what they're saying. I get what they're saying, but help me help you. So how much are you looking to put down? Like, well, Berlitz, I'm looking at this property. It's $2 million. I want to be able to put down at least maybe 20% or 25%, whatever the case may be. And then I'll just tell you realistically, based on this property, where it's located, the purchase price, this is what lenders are offering today.
Mm-hmm.
65% loan to value. And then you told me you want to put 10%. That's not, you're going to have a minimum 35% down. So that 10% is not a real number. Now, there's other ways of getting creative so that, if you truly only have 10% and you need another 25%, well, there's ways of getting around that. You got seller financing, you can bring in another partner and that sort of thing to get creative with getting the deal done. But just knowing what you're looking for, hopefully you got the funds to put it down. Hopefully you got the experience. And yeah, taxes are filed. And there's so many other preliminary items that I typically will send out to a client so that they can be ready to be for real, especially when I go in front of a lender, to be their voice and their advocate.
I'm going to tell you something that shocked me, and you said this early on in the podcast,
Sure.
that your minimum credit score needs to be 680.
Yeah, for like traditional type lending.
Yes, I
680.
expected it to be higher.
No, 680 would be good. Like 680, yeah, lenders. So that's just typically speaking, right? But 680 is still considered to be a good credit score.
Yeah, I think it is as well.
Yeah, it's still a good credit score to be able to get that done. the moment you start getting less than that 680, that's when, from my experience, that's where it gets a little bit tougher. But hopefully you got a great story as to why this is. And
Mhm.
hopefully you got, the issues that was on the report. Hopefully it's all been satisfied and it's just taking time, because time creates that space to where, okay, well, this happened 10 years ago. It's not
Right.
a big deal, that sort of thing. But yeah, but 680 is typically what lenders, 680 or better.
If a client does have a credit score of 680, and again, I know, when dealing with commercial real estate and, dealing with, a commercial real estate mortgage broker, it
Sure.
varies. It
Right.
varies. I understand that. But if a client does have a 680 credit score,
Sure.
what interest rate are they looking at?
It'll depend on the lender, because the credit score will help drive it, and also the type of deal that it is. If the lender really really likes the deal, they'll
Hmm.
try to give you a more favorable. So the type of deal, where the property is located, your credit score, all of that factors into what will shape up ultimately the interest rate that the lender will provide. But
Okay.
if your credit is less than favorable, but they really, really like the deal, they'll give you a competitive rate based on where your credit score may be, or that type of stuff. So, but it's all meshed into it to where a lender will determine the interest rate, and they like to reserve their very best interest rate for
Hmm.
their very best client. So yeah, so you'll get favorable terms just based on just the whole picture.
What tools, and I'm assuming that there are tools, if there's not, please correct me. What
Sure.
tools do you use as a commercial real estate mortgage broker to figure out the trustworthiness of your clients?
Yeah, so for me, I gather all the required documents that a
Mhm.
lender would require to be able to take a look at the deal. I always ask my clients to, give me your stated credit score, and I also include that in the write up. I
Okay.
don't pull their credit. I don't do any background check on them. What I do is I collect the required documents. I do the executive loan summary. So the whole narrative that I create, and I send it to the lender. And once the lender, based on my write up, based on
Hmm.
the underwriting of what been presented to them, if they like it, they say, okay, Berlitz, we like this deal. We would like to move forward with your client. And once they do that, now the lender now pulls credit. The lender now will do that whole background check,
Okay.
to really vet to see, okay, is everything that this person has communicated, is it factual? So now once they pull your credit, they have your credit history. They can see if you've been paying your bills on time, if you have a charge off, or if you have a bankruptcy. Now, let's just say if I'm talking to a client and I may have asked him, did you have any bankruptcy? He said, no, I never had it. All right,
Hmm.
great. All right, no problem. All right. The bank pulls the credit. Berlitz, you said they didn't have no bankruptcy. Yeah, that's what they told me. But we pulled this credit and we're seeing here on the credit file, the credit, there's a bankruptcy that was filed 2, 3 years ago. Oh man, you know what? They obviously that wasn't truthful to me. And what that now does is this: it kills your deal. Your deal's dead at that point, because if you're not effectively communicating to me, and
Yes.
and you're not being truthful, and then something comes up, I mean, the internet is a wild place too. So the whole bankruptcy, or let's just say you got sued for something and the bank sees it and you didn't disclose it, it all it does is just hurts your chances of getting approved with that lender. So it's always best to just be upfront and truthful.
Yes,
Yeah.
yes. Oh my goodness.
Right.
Okay, so what about places that have high tourism? Does that affect like interest rates, the ability to secure commercial real estate because tourism is so high, or maybe because tourism is low?
Right. So depending on the property type, so if you're talking specifically about hotels, lenders would love that, because they know that there's always a continuation of people coming in and coming out. So high traffic count for something like that, a lender would absolutely love, because it's guaranteeing to, now I won't say guaranteeing to them, but it makes them feel good that if we lend this money to said hotel, and said hotels already, producing a certain amount of, net operating income to be able to satisfy our note, I feel confident we're giving this loan for the next 25 years, just based on how high traffic area that place may be, that our loan will be paid. Because the main thing is this with lenders, they always want to know, how are we getting paid?
Yeah.
How is our loan getting paid?
I feel like
And
they ask it just like that too.
yeah, that's what it is. Like, that's 100% it. At the end of the day, how is this loan getting repaid? And once they feel good with that, then they can move, forward. So lenders are always looking. This is how they guard themselves. They're looking at, what is my primary source of repayment. That's number one. If that fails, what is my secondary resource of repayment? And then if that fails, what is my third source excuse me, of repayment? So at the end of the day, yes, the banks can say they love you. You're our client for life. We want to, whatever they say, right? All right, listen, how I'm getting paid back? How are you paying back my loan? But they're gonna say it in a nice, sweet way, of course, though, right?
Yeah.
But ultimately, that's all that it is. So for you and your listeners that's out there, regardless of what property you're looking for, if you're looking to get a loan from a lender, their number one question always and forever be to kingdom come would be, how are we getting this loan paid? Period.
Yes,
Yeah.
yes. Okay, we pushing up against our hour, Berlitz, but I would like for you to just quickly go through the seven. Is it
Well,
the
we went through that.
pre-approval?
The seven we actually did that earlier. You see, I had massage that in there.
I saw that. I saw that. That's
Yeah,
why I want. That's why, and that's going to be my question for you to
sure,
go through it one more
sure.
time. I want
And
to
I give
make
you the high
sure that
points.
my listeners, my
Yeah,
audience, they got that information, because that is such great need to know
sure.
information. So if you can just repeat that for us one more time.
No, absolutely, absolutely. So the very first thing is the quality of the borrower. So when we talk about that, we talk about credit score. We talk about net worth. We're talking about your experience. We're talking about liquidity, both pre-funding and post-closing. The second thing is, when you look at real estate, you always will hear location, location, location. So the property location is very, very important to the lender. If it's in an urban area, rural area, suburban area, how big the market is, so that's important. Third thing is the property's income. So, you have your income that comes in, and then obviously you have your expenses that goes out. What is that NOI? Because that NOI is super important, because that NOI is what's going to determine your max LTV. LTV standing for your max loan to value. The third thing is, no, that was a property location was second. NOI property location was second. Property income was third. The fourth thing is occupancy. Here, anything that is less than 80% for retail, office, industrial, that considers to be a distressed property for a lender. So you want to be at least at 80%. And for multifamily, you want to be at least at 85% occupancy in order for the lender to feel comfortable about that. The fifth thing is the quality of the tenant. So if you are looking to purchase a strip center, they're looking to see, okay, what type of tenants you have in there. Is it a mom and pop, or is it a national credit tenant? Now, if it is a mom and pop, they're looking to see, does that mom and pop have multiple locations? And if they don't have multiple locations, how long have they been at that current, place of where they're currently at? So that would be important. The sixth thing, I think we're at the 16. The sixth thing is the quality of the lease. This is where lenders would like to see at least 5 years or more remaining on the lease in order for them to be able to, secure financing for you. And anything less than 2 years, it truly does give lenders heartburn. It really does. And the seventh thing is the property condition of the property. So the collateral, so they want to make sure that the property itself is intact, foundations is good, there's no leaky roof, before they secure and put a lien on the property. So there you go. That's the 7 pre-qualifiers highlight overview of what that looks like.
Excellent. Okay, so I'm thinking like 2 more questions for you, and then we're going to say goodbye.
Sure.
As a commercial real estate mortgage broker, Berlitz, and you're licensed in Arizona, but you've already established that you can work outside of Arizona in any state. Sure. What is the one thing that you wish all your clients knew or did before they got to you?
What they knew or did before they got to me is that, as it like for me personally, or just like generally speaking?
For you personally.
All right. So for me personally is this. I have 20 years of banking experience. I know what lenders, I know how they think. I know how they underwrite. And this is no knock to any other commercial mortgage broker, but a lot of them don't have the banking experience. Mm-hmm. And a lot of them are just doing it for like, they just kind of get into it. And then they kind of draft up what they think the lender wants to see. And I know what the lender wants to see. And with me, I highlight the good, the bad, and the ugly. And I also, by highlighting the good, the bad, and the ugly, let's just say the bad and the ugly, I'm always offering mitigant factors to the ugly, because in order for the lender to be able to get in I guess that relationship with the client, they have to be able to identify what are some weaknesses to the deal. And part of my job is I do identify those weaknesses, and I'm just upfront with the lender. But then I come with some mitigating factors to say, hey, although it lacks in this area, but have you considered looking at such? So with that, I'm really dedicating a lot of time into getting your deal approved by the lender. Otherwise, I wouldn't take on the request. So just know that you're getting quality with me as a mortgage broker, and I'll be with you lockstep throughout the entire loan process, so you won't be left alone. You'll know exactly what's going on. At least once a week, you hear from me. And if there's any important info that's needed throughout that week, it may be 2-3 times a week. But at minimum, you'll hear at least once a week from me as far as updates and everything.
Okay. Well, Mr. Georges, thank you so much for being on this podcast. And thank you so much for hanging in there with me. Like you said, we've been rocking and rolling for about 3 or 4 months now trying to make this happen. And we finally were able to make this happen. And I'm going to be honest with you, and I'm going to say it was worth the wait. You were worth the wait. You were worth the wait.
I love it. I love it. I love it. I love it. I love it.
Okay, before we say goodbye, who do you think would make a great guest on the podcast, but you have to help me get them on?
Sure. I texted him last night. I said, hey, I'm going to put your name out there, man. David Amda. See, I always mess up my buddy's name. Andamola. All right, he's with Pay Nation. I think he'll be a great sit-in for sure for your podcast, and he can kind of share a lot of what he does and how he'll be a benefit to just about anyone he comes in contact with. Yeah, so David's that guy.
Well, thank you, and I cannot wait to learn from David as well. So thank you so much for being on the podcast. I appreciate you.
Hey, I appreciate you for having me. Thank you so much. This is
absolutely awesome. Absolutely. And to my listeners and to my viewers, thank you so much for tuning in and watching. You can get Berlitz's podcast on YouTube Podcast and Apple Podcasts. And remember, you always have time to listen and learn on the go.